This is a trade recap for Tuesday, March 3rd, 2026. Number 24 of 30 for one and done. And another kind of volatile-ish day in the markets due to the geopolitical situation we're dealing with. But that's kind of one of those things where it is. The best way to look at that would be as just noise. Not to downplay the situation, but from the market perspective in terms of trading, what we do here is basically noise and kind of understanding how technicals work around this stuff. And that is what my mentor basically preaches. A lot of things like numbers and economic data that gets released is more or less just noise. Stay true to, again, the technicals on a chart, especially something like spying cues, because they are truly what matters next to a trading plan, strategy, discipline, and focus. And if you are a new trader or a struggling trader that is trying to get all of that figured out or where to start, that is why a coach or a mentor generally is the best thing you can seek out. Now, there are good ones and there are bad ones. Right now, I would say Pat Mitchell over at Trick Trades, the guy who teaches me, is probably the best out there. And I can say that basically from my own personal experience in terms of interacting with him and being in his education service, not alert service, education service for coming up on 2 years now through the SizeUp program. So if you are interested in learning from him, and I do highly recommend him, you can head over to tricktrades.com and you can look over the service, what he offers, and see if it aligns with what you're trying to accomplish. I have zero regrets with what I have chosen or who I've chosen to, again, partner with for that coaching and mentorship. I can't really think of a time where he has steered me in the wrong direction, or other members in the wrong direction for that matter. He is very consistent. He is a damn near master at everything he does when it comes to the markets and how we trade and formulate trade plans and mentality and discipline and identifying issues that we need to work on and how to read price action, all of that. And if you want a sample of kind of the information he puts out there, you can head over to his YouTube channel, and he has approximately 1,700 videos on there, from trade recaps to lessons. And yeah, get a little preview of the information he puts out. Does he give away the keys of the kingdom, so to speak? Not so much. But again, that's kind of the thing, is like, you want that information, you need to, again, get it directly from your coach or mentor. But like I said, if you're interested in that, by all means, check him out. And yeah, I'd say it's probably one of the best investments you can make in terms of your education when it comes to day trading. And I have, again, just watched myself grow, watched other people grow over the past year and a half under his guidance and mentorship. So I highly recommend you do check him out. If you're interested, there are some links down in the description you can check out as well. And getting on to today's trades, pull those up real quick. All right, so we're gapping down again. Things were looking a little volatile from the overnight session. I think we were about, on SPY, at least the futures was down about 1% when we were going into the open, but again, all within kind of normal-ish ranges. It wasn't massive or anything like that. But if you are new here, The way this is set up is our daily charts are here on the left. Our 1 minute intraday charts are here on the right. And then I usually keep my order management over here, but it doesn't like to stay pinned on top for whatever reason. Interactive Brokers needs to figure that out. So that's kind of how that's all set up. These blue levels you see here, these are the levels that Pat picks for our trade plans, and he starts the night before, and then he refines them the morning of. Because sometimes you just got to wait to see again exactly what the market's going to do, especially when there's some potential catalyst floating around out there. And then for my own personal sake, I put my risk levels on there just to see exactly what I'm risking off of. That way, if I have to go back and look at them, these charts ever, it's like, okay, that's what I was risking off of, blah, blah, blah. So just a little bit more information, as well as during the live trading session, it's easier for me to keep track of visually. So we were kind of in this channel on SPY, and Q's was in this channel, but kind of was at the open, playing around with the level itself. So there's really no distance there. So it can't really execute when it's just opening on top of the level and you need distance away. SPY was kind of similar, but it had a little more distance, and that was the trade I opted for. And it was for a risk reward ratio looking a little bit better. Q's was a little expensive, especially with the volatility. The premium was elevated a little bit. Hope that entry a bit. So again, typically SPY would be down closer to like 200-ish on a normal kind of day-to-day basis. But this time it was, as you can see, more expensive. And Q's was even more expensive than that. So it's one of those things you kind of need to be aware of, take note of. It's like, don't just think you're all good to go and then you fire off the trade. Realize, oh, whoops, the premium was, twice what it normally is, and I didn't check that kind of thing. Got to get you in trouble and skews that risk profile quite a bit. So when we opened up, popped up into this level, fired one. Because of the volatility and the cost of premium, I elected to only take a single contract on this one and not add, because no idea exactly what it's going to do with this decent size gap down. It could, again, easily just squeeze right out, kind of like what happened yesterday. And then on that first reaction, paid myself. Wasn't, again, by all means a huge winner, but again, still a green trade. Didn't want to give it a whole lot because the distance that it came up over could have remounted and pushed. Q's had busted above its level. So you're kind of getting that divergence where this one's flirting with after this resistance level, while Q's could easily take this level as again, support level and keep pushing higher and dragging SPY higher. So just something to watch out for when you get that little bit of a divergence and between the two charts, because SPY and Q's are cross-linked because of the companies that are listed in them. They're again tracking those like the Mag 7 and stuff like that. As Q's goes in one direction, SPY will generally follow, and vice versa. One will be stronger than the other on some days, and it changes here and there. So just one of those things where you just got to really watch out when they are not lining up with each other. All in all, if I'd stayed in it, had more size, was further, had a larger account further in that journey, probably would have added one, and it worked out very well. I mean, it did not come into risk. And again, even if you took it here and added in, paid yourself, or again, averaged in and corrected as you came up into and through, and then paid yourself on the reaction and held small again to ride down. It's like that's a really sizable trade when you realize that range. And that's the thing, is volatility is a double-edged sword. It's awesome because of how it moves the premium around on options contracts, but at the same time, it's also how it can kind of knock you out of a position, or it can kind of skew the loss on a position that goes against you and stops you out. So that's where you really need to control your risk through sizing and picking appropriate levels. I know picking appropriate risk levels for me, I would say probably about a year ago was still something that was like, it was a very hard concept to, or not hard concept, but it was something that I would say I would neglected in terms of uh, locking down and understanding. So now that I would say I'm solved that problem, it's one of those things where not it's not as complicated or as hard as you think, and then having the discipline to respect it and stop out when you need to stop out. But all in all, good day, good green trade, especially after again, taking a loss. It's one of those things. A nice small green is usually, again, it helps like kind of with the mental side of things. And because again, when people take losses, it kind of skews things and they try and make up for it, or they start changing things. And that's probably the exact opposite of what you should do. You should actually not change a thing. You should always, again, hold true to your strategy. If it's a valid strategy and a valid trade plan, you hold to it. You don't just start changing things because you just happen to take one loss, because that was the first loss out of 23, now 24 trades. So again, like what is that? Again, 5% ish. Yeah, 4%, 4.2% essentially. So I mean, you have a 95+% hit rate. It's like, come on. It's like one of those things, like I don't think you can really ask for more than that. I mean, that's why would you change anything if this is your hit rate? I mean, or your loss rate is only like 4% and you're green 96% of the time. Pretty sure you don't need to change your strategy. Sometimes trades just don't work, or maybe they're a little volatile and they happen to stop you out. Okay. And it's like that proves that that loss is going to be erased in short order if your strategy and your trade plans are valid. So I just some food for thought on that one, because I've seen that a lot where people will be like, I took a loss, and all of a sudden they just throw everything out the window and basically try and start over, or they make sweeping changes to their strategy. It's like market doesn't always have to cooperate with you, and that's just something we have to deal with in terms of trading. But have the emotional discipline to make sure you stick to your trade plan, stick to your strategy. And that's something that I can actually say that I do very, very well, which is why, again, I probably am that consistent. That's all you gotta do. And having a coach and mentor that really knows what they're doing and has that defined strategy and that defined trade plan and gives you the guidance you need. Yeah, it's like you're not going to go wrong, really. And if you do go wrong, look in the mirror, because chances are it's something you are doing. It's not necessarily a problem with the strategy. I know it's hard if you're trying to rock this solo, and that's probably why you shouldn't, as someone who's new or struggling. If whatever you're doing isn't working, you need to do some self-reflection there. I know for a while, when I was trying to figure this out on my own, it's one of the things where I had to do some self-reflection there. And I made the determination that investing in a coach or mentor was the right thing to do. So now, on that note, it's one of those things where I'll preach it again. If you get a high-level coach or mentor, Pat Mitchell over at churchtrades.com, check him out. He will not steer you wrong. I have some links down in the description to the different memberships. If you're interested, you get a little bit of a discount on your first month. Also, there's a link to the SizeUp webinar, which is the program that all of us, or the majority of us in the room, do use. And it's a very structured approach to learning how to day trade. Highly recommend checking that one out, though. Even if you don't ultimately sign up, it's like there's still good information in there in terms of like a very structured approach is probably the best thing for you next to a good coach and mentor. So with that being said, that's all I got. Continuing on with one and done tomorrow for the next one, and we will see where we go from there, kind of coming into the home stretch on that one. But all in all, it has been, a great ride so far. Yeah, I will catch everyone tomorrow for the next one. Have a good one.